Hello, welcome to the Sharon Partners quarterly market update for the September 2023 quarter. I'm Kim, one of the financial advisors here, and I'm joined as always by Dr. Steve Garth. Steve, thanks for joining us.
Yeah, great to be here, Kim.
Very good. Now, Steve, let's start as we always do. What can you tell us about the Australian markets over the last quarter?
Yeah, well, I think for markets around the world, we're going to see a great similarity here, Kim. In other words, ever since September last year, markets have been going up and up and up. In fact, when we show you the 12-month returns, they're pretty good. They're between 10 and 20%. But about a few weeks ago, things started to go a bit awry, and it really got down to do with central banks, both here in Australia and in the US, said, yes, we're sort of at the end of interest rate rises, maybe one left. But, guys, interest rates are going to stay higher for longer, and the market didn't like that because it was expecting that interest rates would come down even by the end of this year. If you're expecting interest rates to come down, it's not going to happen soon. See what I mean here? You can see the market's been going up and up and up, although most of that performance is in the last quarter of last year. So we've got a 13.5% return for the 12 months, but in the quarter, it's a little bit negative. It's just down by not quite -1% for the quarter.
And Steve, moving over internationally, you mentioned the US tech stocks. What's happening in the developed economies?
Yeah, so the US is the biggest part of the developed market. They're about 65% of that index. So when things happen in the US, it's going to affect markets around the world. Now, nonetheless, if you look at those 12-month returns for developed markets, up over 21%, that is awesome. And that's really all got to do with those big tech stocks, what they call the Magnificent Seven and the NASDAQ, and a little bit of AI hype going on there driving that up. But once again, once the news that rates will stay higher for longer sank in, it's the tech stocks that have had the biggest fall. In fact, they're down by 10% from their highs in July. It's what the market calls a correction. So that you see the same thing here, that the developed markets are slightly negative for the quarter, but it is a phenomenal 12-month return.
And Steve, sticking with international, what about the emerging markets? We've been hearing a lot about China being a bit of a drag.
China is a bit of a drag, and China are the biggest part of the emerging market index. They're about 35%. So when China's not going very well, the emerging markets as an investment is not going particularly well. So you look here, but in fact it's up, similar numbers to Australia really over the 12 months, up over 11%. But again, it's a very, very sort of flat, small return in the quarter, and that is due to the fact that the Chinese economy, which everyone was thinking at the start of the year was going to take off now that they'd relaxed the COVID lockdowns, but it actually hasn't taken off.
And Steve, something we've been talking about quite a lot lately and has been all over the news, bonds. What's happening with yields and interest rates? That's what everyone really wants to know.
It is. And here's the thing, Kim, if you look at the chart here, you'll see that yields have been going up. When yields go up, prices go down, and you really see that in that chart where we're showing the quarterly returns of a global bond index hedged to Aussie dollars, and particularly in this last quarter, or the last two quarters, it's a negative. The big positive you see in the first quarter was when the US banks kind of fell over and everyone thought, this is it, this is the end of interest rate rises, interest rates are going to come down, and bond yields came down. But of course that tend to pass without much action going on. So we're now at the point where everyone says, look, I know that we're close to the terminal rate, or close to the highest rate, but there's still one or two interest rate rises left. So, as you might expect, Kim, the bond return for the quarter, not so good. Although, now that bonds are earning a much greater income, they've actually got a positive return over the 12 months because the income that they're earning is offsetting that price going down.
And Steve, as you said before, expectations are all well and good, but we never really know. Nobody has that famed crystal ball, do they? So we'll finish as we always do. At Sharon Partners, our investment philosophy is to make sure that you maintain a well-diversified portfolio and participate through all market conditions. Steve, thanks so much for joining us to explain a little bit about what happened in the markets in the September quarter. We look forward to seeing you next time.
Great. Thank you, Kim.